Private equity firms have been on a buying binge, but that doesn't mean they're going to be cutting jobs to squeeze out higher profits, or so they say, so their lobbying groups say. So is this good PR, or do you think it's actually possible?
Well, there are some compelling numbers, Deirdre. Look, we know that when private equity firms go out and buy a company, some people wonder, oh, is my job safe? The industry came out with the following numbers, that $23 billion has been invested by private equity since the start of the recession in January 2008 in 137 bankrupt businesses. And that investment has actually helped to save more than 185,000 jobs. So we went out and tried to find one of these examples, and we found one with a private equity firm called Blue Wolf Capital, which invested in a firm called Gloucester Engineering. They are hiring. Have a listen.
Our investment thesis today is if we own assets today, we will create jobs and we will create value for our investors over the course of the next 3 to 5 years just by buying at a trough and then operating in a very disciplined way and aggressively looking for new markets.
New markets is the key, because to create U.S. jobs, Blumenthal argues that they've got to find markets like India and China and Korea to buy, because people aren't buying as much here at home.
Well, speaking of this idea of exportation, I mean, we actually have seen some strengthening, right, as far as manufacturing jobs data go.
Well, if you think back to the last jobs report, one of the bright spots was manufacturing. Now, the total number of jobs being created in the manufacturing sector doesn't make up for all the jobs that have been lost, but that's an area we're going to continue to watch for job growth, compared to some other private equity deals we've seen. For example, the purchase of Burger King, which is very dependent on the U.S. consumer, and that's an example where we have seen some job cuts.
John, thanks very much. John Erlichman there for us.